This is Volatility 411 for Monday, June 22nd, the second longest day of the year in the Northern Hemisphere. Friday's quarterly expiration has come and gone with a push higher in the morning and pressure on equities into Friday's close. Futures fell fairly dramatically following the cash close on Friday. Now, since last night's reopen, the S&P 500 futures have traded in a 70 handle range. The July VIX futures have traded in just over a 3 handle range between about 33.5 and 36.5. Now, the VIX index closed last week just over 35, which translates into an SPX options market pricing in roughly 2% daily moves. The standard July SPX 3100 straddle, that's the at the money, settled around 190, which prices in an up-down range of about 6% over the next 4 weeks or a month. Now, looking at the small cap Russell 2000 options market, the RVX has maintained a significant premium to VIX for quite some time now. To illustrate, the standard July RUT 1420 straddle, which is also the at the money, is pricing in an up-down range of about 9.5% over those same coming 4 weeks. That's interesting. The VIX futures curve is fairly flat across the front 3 months. The October kink is certainly present, and the October-November future spread is about 2.5 wide with October over. On the economic calendar this week is some housing data, a revision to Q1 GDP, which could be interesting despite it being a backward-looking figure, as well as the normal weekly jobless claims, which get more than normal attention in this market. Finally, for those with a geopolitical bent, tensions between India and China continue to ratchet higher. The border dispute is certainly not a new thing. The two nations fought a war over it in the early 1960s, and the bickering goes back more than a century. Okay, plenty to keep our eyes on this week as well as next as Q2 draws to a close, and what a first half it's been. That's Vol 411 for Monday, June 22nd. Thanks for tuning in.